Hey everybody, welcome back to Trades and Gains. I'm your host Max Pitts, and we have another market recap for you today. It was a day of mixed emotions. President-elect Donald Trump rang the New York Stock Exchange opening bell, but the market seemed less enthusiastic. Stocks stumbled, inflation raised eyebrows, and whispers about rate cuts left investors on edge. Let's break it all down. So to kick things off, our major indexes. The S&P 500, as we can see here, slipped about 0.5%. The Dow Jones Industrial saw a 0.5% loss as well. And the NASDAQ Composite also had a little bit of a slip with a 0.6% drop into today's action. Again, after weeks of record highs, the reality check came in the form of some hotter than expected inflation data and uncertainty about the Fed's next move. Inflation is continuing to play the villain. The Producer Price Index, which tracks wholesale prices, rose 0.4% in November, double the 0.2% economists expect. While yesterday's consumer inflation report left the door wide open for a December rate cut, today's wholesale numbers made investors hit pause. Could the Fed hold rates steady in January? That's the million-dollar question. Right now, the odds of a December rate cut are sky high at 99%, but today's inflation surprise has many wondering if the Fed will pump the brakes on future cuts. Fed officials have already hinted at a more cautious approach moving into 2025. And tech stocks did not escape the carnage either. We had NVIDIA with a drop today of about 1%, 1.4%. And then Adobe also got smacked in the face after they reported weaker than expected earnings and pretty much missed the mark, sinking nearly 14% on today's action. It's clear that even big tech isn't immune to this uncertainty around inflation rate cuts. However, not all was gloomy. Apple inched up to a record high, and this is after they announced a deal with Broadcom, which we covered in a story earlier. In other news, weekly jobless claims came in as a surprise at 242,000. While that might sound alarming, economists caution that holiday season make these numbers extra volatile. It's a wait-and-see situation, but it underscores how fragile the labor market recovery could be heading into 2025. So where do we go from here exactly? Analysts are divided, some calling for a correction of 10 to 15% in 2025 as sticky inflation keeps the Fed in a holding pattern. Others believe this rally has legs, predicting the S&P 500 could hit 7,000 before any significant pullback. What's clear is that volatility is the name of the game. For now, all eyes are on the Fed's upcoming meeting and whether they'll stick to the plan for another rate cut next week. The stakes couldn't be higher as we close out a roller coaster year in the markets. And that's your market recap for today. Don't forget to like, subscribe, and hit the bell icon for daily updates. Let us know in the comments, do you think the Fed will stay aggressive on rate cuts, or will inflation force them to hold back? Until next time, keep those portfolios diversified and your eyes on the prize. This is Trades and Gains signing off.